Hi guys, it's Nick from Match Property Estate Agents. We're halfway through 2023 and it's been a bit of a tumultuous year so far with media reports about house prices and what's going to happen to the housing market. So as we're halfway through the year, I wanted to do just a quick recap of where the market sits at the moment in North Devon. So this period of time is quite important because it's quite close to the recent Bank of England announcement of increase in interest rates by 0.5%. That's quite a substantial increase. It was higher and more substantial than people were expecting off of the back of inflation remaining fairly steady in the UK. There will be a knock-on effect from that. There will be a bit of a knee-jerk reaction from the market, and I think that's what we're seeing in the stats at the moment. So first, let's look at what's happening in the wider area of the southwest and look at the stats currently in this area. So new properties coming onto the market in the southwest is 3,797 properties. The average is 3,406, so slightly above average, and this is for the last working week of June. 2,489 properties have had price reductions, which is a significant increase on the average, which is 1,907 properties. 2,541 properties have been sale agreed in the last week. That is above average, which is the average is normally 2,365 properties, and there have been 796 properties falling through. So sales that were agreed that are no longer proceeding, and that is well above the average of 566. So this is something that indicates a reaction to the market, reaction to those announcements from the Bank of England with regards to affordability and how that's going to affect house prices. We're still seeing properties selling fairly well, so there's a good demand for properties. There's a reasonable amount of properties coming on the market, but not an excessive amount, which again helps to keep properties as stable as possible. What we're really looking for is when we see a significant spike in the number of properties coming on the market, potentially the number of properties falling through, although that isn't always a very accurate indicator of price, but more people's concerns and affordability issues. So to see a high level of fall throughs this week is quite normal. That's what we would expect after something of a shock announcement with regards to interest rates going up. That's going to affect the amount of money that people are paying on their mortgages on the property that they're buying, and if they can't renegotiate on that property, or they feel that they need to reevaluate their mortgage lending, they're going to pull out their current sale and reevaluate from there. One important thing to note is that this is an expected result of the announcement. 65% of the total stock have had price reductions. That is a really good sign on both sides of the market. So if you're selling a property, it's important that you keep aligned to the market that you're in at the moment. And also if you're buying a property, it's important that when you're looking at properties that you feel that they are aligned to the market at the moment and you're not going to be overpaying for a property and perhaps regretting that purchase later on down the line. The number of fall throughs is actually still fairly steady. Of the total available properties, that's an average of 31% fall through rate, which is the national average. It's nothing unexpected at all. So although fall throughs have increased in the last week, it's at a sort of national level, that a national average level that is to be expected. And this week, just gone, a total of 66% of the total stock available for sale have actually gone under offer as sale agreed properties. So again, it demonstrates that there's a fairly healthy market still. There's still a good level of demand. And that's partly because properties are being realigned in terms of pricing, and also sellers' expectations in terms of offers have been realigned. So even if they're not reducing the asking price perhaps of their property, they are more willing to take a more substantial offer on the property. And those properties that have been reduced are then going on to sell. So it's a good, healthy marketplace. It shows that the market is adjusting to the current circumstances. So, as you know, the market that we operate in is the North Devon premium market. So that is pretty much properties from £500,000 and above. So let's have a look at the stats for North Devon. So at the moment there are 409 properties available above £500,000 in the North Devon area, and that is at an average price of £936,000. That is actually increased slightly and has been increasing slightly over the last few weeks. We've been monitoring this really since January. So we've seen a gradual increase in the value of the properties that are being sold. That's not saying obviously that prices are going up, it's just showing that the stock of properties coming onto the market over the £500,000 mark is increasing at the higher end of that range. So basically above £1 million, or certainly the higher end of that. There are 24 new instructions in the marketplace this last week, with an average asking price of £915,000. So again, the average asking price is really quite high in terms of the size of properties. So that's reflective of the size of properties that are coming on the market, not an increase in asking prices or values. The total number of sold subject to contract or sale agreed properties in the last week is 10. With an average asking price of £918,500, and there have been 22 price reductions in the last week. So again, it mirrors what's going on in terms of price reductions. We're seeing a healthy number of price reductions in that 1 week period, which is obviously a reaction to what's happening with interest rates and so on and so forth. The value of properties are going up, so it means that there's a higher degree, a higher proportion of the more expensive properties coming on, the larger properties, perhaps with more land, and so that's skewing the figures slightly, and we're having average prices creeping up quite significantly, closer or just under the £1 million mark. So the important thing to note is that this was quite an expected scenario. It is quite normal for this time of year, and it's also normal for the announcements that we were expecting. So the media were trailing the interest rate rise for quite a number of weeks prior to the actual interest rate rise. All eyes were on the ONS figures for inflation when they were released, because it was going to be very much dependent on what the inflation level was, whether that had come down significantly or not, as to whether the interest rates were likely to go up again. As it happens, the inflation rate stayed fairly steady, and the Bank of England chose and voted to increase the rates not by 0.25%, but by an unexpected 0.5%, which was quite a shock to the markets. It wasn't, it's not extreme, but it was a shock. It was a bigger jump than most people expected. And I think what we're seeing reflecting in price reductions and fall throughs is that shock wave coming through the market of people reacting to higher rates on their mortgage, and potentially a change in affordability, and that will have a knock-on effect on the values of properties. And that's why we've seen sellers reacting to that and adjusting and realigning, but we've also seen sales stay fairly steady. We've seen bigger properties come onto the market as well. So it's showing that there's quite a resilient market. The market is still ticking over. There's lots of sales still being agreed. There are some sales falling through, but most likely, given the figures that we're seeing, those properties will be relisted at sensible and realigned prices, and they will probably then also get sale agreed quite quickly as well. So again, as I've always said, tailor your actions and your selling strategies to your own circumstances. If you're buying, do the same. Get advice that's tailored to your needs, and if you do need any advice, please do give me a call and I'd be happy to help.